Call the finance department to the floor.
Should I give a little intro?
I think some of you
Okay.
wouldn't mind for our audit presentation.
There you go. Well, good evening, Mayor and Council. So tonight we're going to do this like we have the last few years. We have Nancy Schultzenberg here. She's a partner with Bergen KDV, and she is the partner in charge of our audit. So she'll go through some information for you. We'll basically turn it over to her. This is her night to report. But we've done this as a work session so that there's ample time for her to go through it and if you have questions. But turn it over to Nancy.
All right, thanks, Bill. Good evening, Mayor, members of the Council, Administration. Happy to be here tonight to go over the results of our audit for December 31st, 2024. So I'm going to start out. Oops, whoa.
Well, that was quick.
Well, thank you very much.
Jim, are you happy now?
Yes,
You always want things quick.
I didn't get my popcorn done.
Okay. There we go. All right. So again, want to start out by talking about the communications that we issue as part of our audit. The letters are found in their entirety in the financial statement document and then also the separate schedule of federal expenditures. There's a bunch of titles to that one. So,
And these are on your desks, so.
Right. Right. And the opinion letter is in the financial statement document, so they're really thick. I don't know if you provided that yet.
So the audit report came to you electronically.
Okay.
I guess I could have done more of an intro. But that went out electronically. We have not bound any copies, so if you want any paper copies, let us know and we'll get the bound book put together. But right
Perfect.
now, this is our master. This is the book you received it over email, so.
Okay, perfect. So the opinion letter is in the front of that document, and the opinion letter is the most important letter that we issue. It indicates, in our opinion, that the financial statements are fairly presented in all material respects based on the results of our audit. So that is a clean opinion, is another term we use, and the best that we as your auditors can provide. There's a lot of other information in that letter, but again, that being the most important part. There we go. I didn't go many pages, just one. And then in that separate document, you'll find the other official letters that we issue. The first one is our report in accordance with government auditing standards. So we take a look at internal control and also compliance with laws, regulations, contracts, grants, other matters. And based on that work, we do have one internal control finding, the lack of segregation of accounting duties. That's not new for the city of Fergus Falls, and that is not at all unusual for cities of your size.
That's year after year.
Yes, yes. There are some overlaps, and you have a finance director that has some day-to-day involvement. So not that we found anything. Obviously, we gave that unmodified opinion, but just something to be aware of. And then you did expend over $750,000 in federal funds again this year, so we performed a single audit. We tested 2 of your programs, ARPA, and then also the Highway Planning and Construction Grant. Based on our work there, we're issuing an unmodified opinion on compliance, and we had no internal control findings as internal control relates to those specific compliance requirements. And then our last official letter is going to be that Minnesota Legal Compliance Report. There are 7 broad categories of legal compliance that we test as part of our audit, and there were no instances of non-compliance noted with that work as well. So just the one written finding for the entire audit. And then you have another document titled the communication letter. And in there, we have several sections. The first one is going to be a letter that defines deficiencies and then talks about that lack of segregation of accounting duties. Then we move to required communication. So these are things that our standards as auditors say we need to put in writing to you as the governing body for the city of Fergus Falls. And it would be our tool if we had anything significant to report, any difficulties, disagreements, those types of things. Nothing in there strays from our standard language. We have financial analysis, which I will cover this evening. And then in the back, there's some emerging issues, the newest government accounting standards that will be implemented over the next several years. So that's probably more for Bill's purpose than the rest of you. So moving then, I hope, to the financial information. Starting out with a lot of charts and graphs to take a look at your general fund as the primary operating fund for the city. So in total, your fund balance is presented on this chart with the components outlined in different colors. For 2024, fund balance did increase $661,000. When we look at the green on the top, that's your unassigned. That's what's available for future spending, and you do have a policy that outlines a minimum of 35 to 40%. At the end of the year, you were at 47%, so in compliance with that policy. I think you're gonna have to run it for me. We're just gonna set this down here. Yeah, very eager to run to the end of the report. All right. The next chart takes a look at total revenues, total expenditures over the last 5 years. You can see an overall increasing trend in your revenues and expenditures, and you can also see that expenditures have exceeded revenues in each year that we're looking at. For 2024, revenues were up 6.1%, expenditures up 7.8%. After we factor in other financing sources and uses, the biggest one of those being transfers in, your fund balance did increase by that $661,000. And moving to details a little bit more, drilling down into your revenues for the last 5 years. Overall, again, revenues up 6.1%, which equates to about $860,000. And when we look at the different categories, you can see they're pretty consistent year over year with the exception of intergovernmental. That's up about $804,000 related to the ARPA funds that were received in previous years but recognized in fiscal '24. And then we have a budget to actual chart for your revenues. So overall, revenues were about 10% or $1.4 million over budget. And that came in a couple of significant categories. That intergovernmental category, the ARPA funds, there were some smaller state grants that were not included in the budget that were also received, driving that up about $1.1 million over the budget. And then miscellaneous, which includes investment income being the biggest variance there. Conservative budget for that type of revenue. It's tough to predict what the market's going to do on an annual basis, so that was over budget based on conditions for 2024. And then one last look at the revenues in a pie chart presentation, looking at a percentage of the whole for each category, each main category, and you can see how consistent these pie charts look. The biggest difference comes between your intergovernmental revenues related to the ARPA funds, again, that were recognized in 2024. We'll switch gears and take a look at your expenditures. So I did mention those were up about 7.8%, which equates to just over $1.1 million. And you have a few categories that did increase during 2024. The first one is going to be your public safety. You had cost of living increases, and then you also had a change in your ranking structure. So salaries and wages were up in that category. Streets and highways up about $509,000, primarily due to 2 years worth of seal coating. So if you look at 2023, unusually low, back up to more normal costs in 2024. And then if you go to the far right, your capital outlay did increase from 23 to 24. There were 3 vehicles and some other various equipment purchased by the fire department, creating that increase. And then we have a budget to actual chart similar to the revenues. Expenditures were under budget, about $2.3 million or 13%. A couple of drivers in that variance. First of all, your general government was under budget about $337,000. There was a budget for some benefit payments due to employees that went unused in 2024, but you're anticipating to use those in 2025. And then again, if you go to the far right and you look at capital outlay, that's under budget by $1.5 million. That's common for City of Fergus Falls. That allows you to save for the future. So unspent capital budgets get carried over for future use. And those are set aside in the fund balance. And then we have the pie charts for expenditures. And these charts are even more similar than your revenues were. So when we look at this, sound budgeting allows the city to avoid those major fluctuations between categories and allows you to plan for the future between those programs. Any questions on the general fund? All right, then we'll move into your enterprise funds. starting with waste management, and you can see how consistent the operations of this fund have been. Primarily between 23 and 24, they're almost identical. So you did have operating income of about $512,000. And you've had operating income each of the 5 years. We have sewage disposal, a little bit of a change here. Operating revenues were up about 8% related to a rate increase. Your operating expenses not up as much, about 4.4%, and that came across various categories. There wasn't any one category that the spending was significantly different from the prior year. You did have operating income for the 5th year in this fund as well, about $186,000. And that's a common theme in your enterprise funds, that they are providing operating income, which is important because there are other things that are involved in those funds, debt payments that have to happen, capital needs, and all of those fall below that operating income line. In your water department, again, very similar operations over the 2 years. So revenues almost flat. About 0.7% change. You did have a rate increase in that fund, but with the wetter summer that we experienced in 2024, thanks, Bill, usage was down. And then on the expense side of things, down about 4%. And again, across several categories, not any one that jumped out as significantly different. So $889,000 as operating income in that fund. And then the last utility fund is the stormwater fund. And this fund, excuse me, this fund did experience an increase in the operating revenues with the rate increase. It was about a 14% rate increase, which equates to about $1.25 per household. And then expenses in this fund very flat from 23 to 24, so allowing for that operating income to increase, and was about $337,000 for the year. And then we have the last enterprise fund, which is the liquor store. So again, consistency is the theme for the city for when we look at 23 versus 24. So your sales were down about 0.4%, so pretty consistent with the prior years. The cost of sales down about 0.7%, so again, very consistent. So gross profit was pretty flat, and we'll look at that on the next chart, did increase just a bit. Your operating expenses were down about 7.8%, and that is related to the pension. So those expenses fluctuate from year to year, and you did have a decrease for 2024. So operating income of about $1.2 million, which again, pretty consistent with the prior year.
Nancy, maybe you want to touch on just why that pension fluctuates. It is being part of the state.
Yeah. So what happens is you have the overall statewide pensions that you participate in. And each year those pension plans have an actuarial study done to come up with what is the statewide pension liability, net pension liability. There are changes that happen in estimates, like is investment income higher or lower than what the actuary planned last year? Is the experience with retirements and longevity and all of that, are those different? So assumptions. And then we take all of that information, and any changes get amortized over several years, and the change in the liability is part of that big change. So you see fluctuations. The amortization is meant to even the swings, but for the last number of years, the swings have been so big that it does affect what you're seeing. So it's not an expense you can control. It's not an expense you're ever going to have to actually write a check for. But because these statements are on a full accrual basis, we need to recognize those amounts annually.
So if the state pension fund then looks like it's, say, going to be underfunded, then they're able to kind of push that expense out to the participants?
Well, they allocate the proportionate share. So based on your contributions into the plan, that's the proportionate share of the liability that gets allocated to the city, but it doesn't change your contributions. So you're going to make those same percentages that you always do. It's just a look at what is the overall liability and how much of that equates to what Fergus Falls is participating in.
So, I mean, will there become a day of reckoning? I mean,
Well, they do analyze rates, and
Yeah.
those rates are set by the state, and they do increase. But it's not It's not like, oh, this year the liability is this much, the rates next year are going to be
So
like this.
if their forecast was for it to be underfunded, then they would raise the
may.
the contribution to everybody so that they would build the fund back up
Yeah,
again.
yeah, they may do that, and they have done that,
Right.
but by small amounts, very
Yeah.
small amounts. Yeah, yeah. So it's an interesting concept. You know, you do participate, and it is, when you look at things, part of your liability. But again, not something that at the end of the year you actually owe.
Yeah.
Yeah.
We don't cut a check as such. Yeah.
No, definitely not. So it kind of muddies the statements in some cases, and this is one where it did. All right, so then looking at your gross profit percentage in that liquor store, like I mentioned, very consistent between 23 and 24, up 0.2%. But when you look at this, I think the positive to take away from it is the steady increase. So we saw a lot of liquor stores with significant amounts in 20 and 21, and then they kind of evened out. City of Fergus Falls has continued to grow that gross profit percentage. And we have one last look at your liquor store, and this is comparing your two locations. So on the left, you have the west store, and on the right, you have the east store. Both of those generating an operating income. Smaller activity, obviously, at the east store, but still contributing to the overall contribution to the general fund to reduce those tax burdens. And then we have a couple charts to take a look at some tax information. So starting with your tax capacity and market value and the tax capacity rate. So you can see, again, consistency is the theme. So between 23 and 24, it went from 53.8 to 54.8. So very, very small increase there. And I think that story is told on the next slide. So on the left, you're showing the tax levy, and then on the right, the tax capacity. So because the tax capacity increased at a greater rate than your tax levy, or close, that's what causes that consistency in the tax rate. So allowing you to increase based on your needs without a significant change in what the taxpayers are feeling. And we have one last chart that takes a look at the city as a whole and the components of net position. So in the front of your financial statements, we have a couple of statements that roll everything together and adjust everything to a full accrual. So all of the city's capital assets, all of the debts, those pension liabilities, all of that is included here. And the overall position of the city did increase by just under 4.8 million, so headed in the right direction. And when you look at the categories, the biggest change came in the blue, which is in the middle there. That is your restricted amount, went from 12.5 to 18.1. There's increase in the amounts that are restricted for future debt service payments, and then you also have some unspent bond proceeds related to the park improvements. The bonds were issued, but not yet spent, so that becomes a restricted net position, because there's no capital asset to yet offset it. And that's everything. But happy to take questions.
Mark, question?
Yeah, thank you very much. Nice presentation.
Thank you.
Does the audit, I'm going to go back to the general fund balances. In regards to, Bill and I have talked in the past about what is necessary for each one of these funds to be fully funded so that possibly we can lower the real estate taxes to our consumers. With that being said, it appears to me that these divisions are fully funded. Is that correct?
By fully funded,
Pardon?
what do you mean exactly by fully
Help
funded?
me, Bill. The funds being funded,
So these fund balances, this is like the net worth of the general fund. So
Yes.
this is the assets in excess of the liabilities. So they're funds we have on hand. Now, within the audit report, and we can dig this out, at the end of note 3, I know there is a very detailed that comes up with what all these are comprised of. Like, here's all the restricted, that we can't spend on anything except what they're restricted for. Then there's committed, where it's, from council commitments. Then you get down to the unassigned fund balance, which
Which
is,
is 7.3 million.
yeah, the 7.3. Then that is the fund balance like that we used to operate on for cash flow. And we set our fund balance policy like that, 35 to 40%, because we get our tax revenues and local government aid twice a year. So at the end of the year, we need a savings account to cash flow us till, June, till we get our first payments in. So that's when we look at that.
So when we talk about, if you will, one of the business functions, utilities, is that fund fully appropriated?
The utility funds, and you can weigh it, correct me if I'm wrong, but since we are having operating income, and that is our goal, is so that we make sure we're not operating any of those at a loss, that maybe answers your question of being fully funded. So we are covering our costs. Am I answering that right?
You are, yeah, you are covering your costs. When you look at the net position in each one of those funds, there is a significant amount that's tied up in your capital assets. So we show net investment in capital assets as all of your capital assets, and then we subtract the debt. Well, the debt needs to be paid by the amounts that are available for cash flow. So again, yes, fully funded in a positive position, but there's a lot that goes into how much is the right amount.
Yeah, that was going to be my next question. If we're fully funded, if you will, whatever percent it is for the stormwater or the water department, does that take into the future look as to what the debt services is and what capital replacements are? Rather than, as the new guy on the block, coming into the budget and say, okay, we're fully funded in the water department, I'm going to take those excess funds and, in essence, I don't want to say shift them, but appropriate it so that our real estate taxes don't go up.
Well, that's a tough question, and you have a plan, like a capital plan, and those funds have significant capital needs in the future. So to avoid significant debt issuances, the goal is to have some funds available.
Yeah, and I appreciate that. I'm just trying to figure out, what is an appropriate number, not necessarily just today, but looking forward to the current debt service that we have,
Right.
plus that next step of an actual capital improvement, the water department, the water tower.
Right. And the unrestricted position in those funds right now is at a point in time. That doesn't consider, future interest payments.
yeah,
The debt is there, so you've got assets and liabilities to get to your net position.
Yep,
But
I understand this is a
there's a lot of
picture.
interest and other things tied
Yep.
to that.
So,
Let me chime in just a
Yeah.
little bit on that. So the one thing we do each year is we update our long-range plans on those utility funds. And we go out, Sandy, do we look out about 10 years, right? So we want to plan ahead for the next 10 years and manage these funds. Like you said, it's at a point in time. We want to make sure 10 years from now that we've made good decisions along the way and we didn't just spend the fund balance down and, 10 years, now we don't have anything. So we're planning to manage the cash balances in those and do the improvements that are needed. So we definitely look at that each year. Now, last year, I know you mentioned about, we saw the impacts of rate increases because we took a little more aggressive increases in 2024 because we were, looking at our more aggressive, more fast-tracked capital plans. Now, this year, we didn't touch our utility rates yet, and we're not going to in '25 because we're going to, work with the city council and get back on, okay, what are we going to do with our capital improvement plan? Then we'll bring all that before you again at that time.
I just want to make sure I wasn't going to steal all the money.
Oh, and I'll also tell you why you're not going to steal all the money, is because, and Nancy, correct me if I'm wrong, but I believe it's state law. I know within our city code as well, that we're not allowed to pull water, sewer, stormwater funds for things that are not water, sewer, stormwater related. So you couldn't just on a whim say, you know what, I'm going to take $500,000 from the water fund and I'm going to put it in a park building or a police department. It has to stay in those funds for that. They're restricted that way.
Correct. I understand that, but at the same time, if administration comes with a utility increase and we're fully funded, you know, I'm going to have my heels in the sand a little
There you
bit.
go. Yep.
Bill, you know I've always stood beside you. And Sandy, I watched this budget for 5 years. And the accounting in the back office is remarkable.
Thank you.
I want to express that publicly. It's a clean audit. The guys know what they're doing. So thank you very much for everyone's service there.
Thank you.
Any other questions?
Oh, and you too, Nancy.
All credit to the city.
No, they do a good job. KDV is one of the experts in the governmental area, so I mean, they're very helpful to us in implementing these new standards that come out, so that's for sure.
Is that me or you?
We know the microphones are working good, but now it's maybe oversensitive.
Any other questions of Nancy? If not, what's the procedure from this point?
So this is on the city council agenda for you just to accept the audit report. I don't know if we technically have to do that. I mean, the audit is done, it's performed, but do all cities usually do that?
They do accept it.
Okay, they do accept
They
it.
don't approve it, but they accept it.
So that is our action item on the council meeting tonight.
That would be appropriate.
So no action at this work session.
Yep.
but-
With that, thank you very much, Nancy, and we'll see you in a year.
All right, sounds
Thank
good.
you.
Thank you all very much.
I don't know what, I mean, they got all these fixed and they're very sensitive, so. It's just my groaning.
Don't speak with a sharp voice.